Folks, I want you to close your eyes for just a second. Picture your home, not just the bricks and the siding, but the life you live inside it. Imagine that home, completely paid for. No more mortgage payment hanging over your head every single month. That feeling right there is called financial peace. It's the freedom to know the roof over your head is truly yours. This isn't some far-off fantasy reserved for the super rich. This is a goal you, yes you, can achieve. It takes a plan, some grit, and a decision that you're sick and tired of being in debt. You need a roadmap. The journey to paying off your mortgage early is about more than math. It's about changing your mindset. So, let's get started. We're going to break down the steps one by one to show you exactly how to get this done. The only good mortgage is a paid-off mortgage. Are you ready to get weird? Live like no one else now, so you can live and give like no one else later. Before you can slay the dragon, you have to understand its anatomy. Your mortgage is that dragon. Its fiery breath is the relentless compounding interest that scorches your financial future, and it feeds on your most valuable asset, time. The longer it lives, the more it consumes. It all starts with the dream of homeownership. The bank hands you a massive pile of money, and in return you sign on the dotted line, agreeing to pay it back over a very long time, usually 15 or 30 years. This long-term agreement is the monster's playground. But the bank isn't doing this out of kindness. They charge interest, and the system is front-loaded against you through a process called amortization. In the early years, your loan balance is highest, so the interest you owe is also at its peak, meaning most of your payment just feeds their profit. Imagine your first few hundred payments. You write the check thinking you're making progress, but the bank's systems are designed to pay themselves first. For years, a tiny sliver chips away at your principal while a giant chunk of your hard-earned money goes straight to the bank as profit. It's a brilliant business model for them and a terrible deal for your family's future. The longer you stay in debt, the more they make. Every dollar paid in interest is a dollar stolen from your retirement, your investments, and your freedom. Let's put hard numbers on this. For a $200,000 loan at 5% on a 30-year term, your first payment of about $1,073 sends over $833 to interest. Over the loan's life, you'll pay an additional $186,000 in interest, essentially buying your house almost twice. When you see how your wealth is siphoned away, get angry. That anger is fuel. Don't let it become despair, channel it into a focused, strategic assault. The secret to defeating this monster, the key to breaking your chains, is simple. Attack the principal. Every extra dollar designated to principal doesn't just reduce your balance, it eliminates future interest that dollar would have created. It's a double whammy. That single extra dollar pays down debt now, and prevents a cascade of future interest payments from ever being born. This is how you flip the script and make the system work for you. You stop being a passive debtor and become an active investor in your own freedom. You're about to learn how to starve the interest beast and pay off your home in record time. Next, we get practical. The plan is simple but requires focus. We'll arm you with tactics like bi-weekly payments, recasting your loan, and how one extra payment a year shaves years off your term. Get a written plan, a budget, and the mindset to act. Winning with money is famously 80% behavior and only 20% knowledge. The math is simple, but changing our habits is the real work. You already know the why, the dream of freedom. So now let's focus on the how, the practical, actionable steps that turn that dream into your reality. It all starts with a written monthly budget. This isn't about restriction, it's about giving you control. Every single dollar needs a name before the month begins. You tell your money where to go, instead of wondering where it went. This is the non-negotiable foundation for your success. Next, you must be completely debt-free, except for your mortgage. No car payments, no student loans, no credit card debt. Why? Because those other debts are financial anchors, each with its own high-interest chain, stealing your momentum and your income. Eliminate them first to free up your most powerful wealth-building tool. Then, build your financial fortress, an emergency fund of 3 to 6 months of expenses. Don't prepay the mortgage without this buffer. Life will happen, the AC will break, a medical bill will arrive. This fund turns a potential crisis into a simple inconvenience, protecting your mortgage payoff plan from being derailed. With your budget and emergency fund secure, you can attack the mortgage. Pay extra on your principal every month, as much as you can squeeze. Most important, communicate with your mortgage company. Make sure extras apply to principal. Write for principal only in the memo or use the online additional principal box. Be your own advocate. You are the CEO of your household finances. Act like it. This is non-negotiable. Once your budget is set, you'll find money you didn't know you had. That's your ammo to throw at the mortgage. Celebrate small wins. The process gets easier as you see the balance fall and the interest portion shrink. Now we move from mindset to specific tools. Extra payments, bi-weekly strategies, rounding up, combine them, and amplify the results. The simplest and most effective way to crush your mortgage ahead of schedule is to make extra payments. There's no magic, just brute force and consistency. The most common method is one extra mortgage payment per year. Divide your monthly payment by 12 and add that amount each month. So if your payment is $1,200, add $100 per month. That extra $100 goes straight to principal. Small, consistent actions have massive impact. That $100 doesn't feel like much, but over time you shave years off your loan. On a 30-year mortgage, one extra payment a year can shave about 6 to 7 years off the loan. 7 years of freedom. You get to keep tens of thousands of dollars in interest. That's a fantastic return on your money. To pay it off in half the time, we need more intensity. Throw every spare dollar at the principal. Bonuses, tax refunds, selling items, side gigs. Your income is your greatest wealth-building tool. For a season, use it as a debt-destroying flamethrower. Every principal payment is buying freedom back from the bank. You'll watch the principal portion grow and the interest portion shrink. You are rewriting your amortization schedule. Here's another strategy. Bi-weekly payments. Either on their own or combined with extra payments, they accelerate payoff. Pay half your monthly mortgage every 2 weeks. 52 weeks equals 26 half payments equals 13 full payments a year. Set up automatic payments. If your lender won't accept partials, open a separate savings account, deposit half payments every pay period, and make the extra payment yourself. No fees. Frequent principal reductions reduce interest that can accumulate. It's a small systematic way to accelerate payoff. Check with your lender first. Never pay a third party a setup fee. You can do this yourself for free. Combine bi-weekly transfers with tax refunds and bonuses thrown at principal. Now you're really cooking. The psychological win of seeing progress keeps you engaged. This next strategy sounds too simple to be effective. The rounding up method. It's an easy starting point if big extra payments overwhelm you. Look at your payment. Say it's $1,422.57. Round it to $1,430 or better yet to $1,500. That extra $77.43 each month adds up. Over a year that's over $900 toward principal, almost an extra full payment, and you barely notice it in your budget. Rounding up builds habit. Next year round higher. It creates momentum. Small wins become an avalanche. Always make extras principal only and confirm they apply to principal. Don't let the bank apply them to future bills. This is the power of small consistent actions. Don't dismiss the small stuff. It adds up into serious time and interest savings. Talk is cheap. Let's look at real numbers to prove this works. We'll use a common example, a $200,000 mortgage, 30-year fixed at 5%. Your principal and interest payment is about $1,074. Make just that payment for 30 years, and you pay about $386,640 total. That's a staggering $186,640 in interest alone, because in the early years, your payments barely touch the principal. Now suppose you find an extra $500 per month and apply it as a principal-only payment. It's crucial to specify this with your lender. You still pay the $1,074, plus that $500 directly to principal, for a total of $1,574. By doing this, you won't be paying for 30 years. You'll be mortgage-free in just under 15. You cut the life of the loan in half, reclaiming a decade and a half of your life from this financial burden. The interest paid plummets from $186,640 down to roughly $83,000. You keep over $103,000 in your pocket. That's life-changing money for retirement, college, or launching that business you've always dreamed of. This isn't a magic trick. It doesn't matter if your mortgage is bigger, smaller, or has a different interest rate. The principle is universal. Pay down principal faster, and you shorten the loan and kill the interest. The bank bets you'll be lazy and make minimum payments for 30 years. Their profit model depends on it. When you decide to pay extra, you are actively breaking their system and taking back control. A little short-term sacrifice yields massive long-term gain. The math is undeniable. The more you pay toward principal, the faster debt dies, and the more of your own money you keep. This is the foundational step to building real wealth. As you pursue mortgage freedom, beware pitfalls that can derail progress. The first is life. Emergencies happen. That's why a 3-6-month emergency fund is non-negotiable. Paying off a mortgage is a marathon. Keep your why visible. Write it down and put it on the fridge. Celebrate milestones to avoid burnout. Beware refinancing into another 30-year loan for a lower payment. It resets your clock. Only refinance for a lower rate or a shorter term. Ignore friends and pundits who say invest instead. Paying off your mortgage is a guaranteed, risk-free return equal to your interest rate. More importantly, it's peace. We covered the why and the how. The only thing left is action. Get on a budget, find extra money, and make that first principal-only payment today. Imagine the day you get the paid-in-full letter. You won't just leave a house, you'll leave a paid-for home and a legacy of intentional finances. Start now, not tomorrow, now. Your future self will thank you. If you found this helpful, subscribe, and share this video with someone who needs mortgage freedom. Take action today. Your journey starts now.